Hello friends! Today, let's talk about something many of us ignore until we see a deduction in our bank statement. I'm talking about bank charges, specifically the charge for not maintaining a minimum balance. So what exactly is this minimum balance? Think of it as a small promise you make to your bank. It is the lowest amount of money that the bank wants you to keep in your savings account at all times. This amount is not a fee you pay. It is your own money that must simply stay in the account. Banks have this rule to ensure that the account remains active and to help them cover their own operational costs. Imagine your bank account is like a small shop. To keep the shop running, the owner needs to have some basic stock on the shelves. In the same way, your bank needs you to keep a certain amount of money with them. This helps them manage their daily business, like giving out loans and making investments. The bank uses the total money deposited by all its customers for these activities. Now that we know what a minimum balance is, let's look at some of the most popular banks in India. We have big private banks like HDFC Bank and ICICI Bank, which are known for their modern technology and wide network of ATMs. Then we have the country's largest public sector bank, State Bank of India, or SBI, which has a presence in every corner of India. Another major public sector player is Canara Bank, which also serves millions of customers across the nation. These are just a few examples, of course. There are many other banks like Axis Bank, Kotak Mahindra Bank, Punjab National Bank, and Bank of Baroda, each with its own set of rules. It is very important to remember that each bank operates differently. They are all competing for your business, so they create different types of accounts with unique features. The location of your bank branch plays a huge role. Banks categorize their branches into three main types: urban, in big cities like Mumbai or Delhi; semi-urban, in smaller towns; and rural, in villages. For a regular savings account at HDFC Bank, customers in urban branches typically need to maintain a monthly average balance of 10,000 rupees. If you are in a semi-urban branch, this amount drops to 5,000 rupees. For rural branches, the requirement is often a quarterly average balance of 2,500 rupees. Now let's look at ICICI Bank, another major private bank. Their rules are quite similar to HDFC's. For a regular savings account in an urban or metro location, the required MABI is 10,000 rupees. For semi-urban locations, it is 5,000 rupees. And for rural locations, the MAB is 2,000 rupees. What about the State Bank of India? For a long time, SBI also had minimum balance requirements. However, in a very customer-friendly move, SBI removed the average monthly balance requirement for all its basic savings bank accounts in 2020. This was a huge relief for millions of its customers, especially those with lower or irregular incomes. Finally, let's consider a bank like Canara Bank. As a public sector bank, its requirements are generally more modest compared to the top private banks. For a regular savings account at Canara Bank, the minimum balance needed is often based on a quarterly average. In urban and semi-urban branches, you might need to maintain an average of 2,000 rupees. For rural branches, this amount is typically lower, around 1,000 rupees. It can be frustrating to see a penalty for low balance, and you might wonder, why do banks do this? It's my money. There is a business reason behind these rules. Banks are not just a place to store money safely. They are businesses that need to make a profit to survive and serve you better. Every account you open has an associated cost for the bank. They have to pay for the technology that runs your mobile banking app, the staff at the branch who assist you, the security guards, the electricity, and the network of ATMs that provide you with cash 24/7. The money you deposit in your account doesn't just sit there. The bank uses this pool of deposits from all its customers to give out loans, such as home loans, car loans, and personal loans. They earn interest on these loans, and that is their primary source of income. When you maintain a stable minimum balance, you are contributing to this pool of funds that the bank can use to lend and earn. The minimum balance rule is a way for the bank to ensure that each account is economically viable for them to maintain. Furthermore, the minimum balance requirement also acts as a filter. It helps the bank distinguish between serious, long-term customers and those who might open accounts for temporary purposes without any intention of using them regularly. Nobody likes paying penalties. The good news is that avoiding these charges is quite easy if you are a little careful. The first and most important tip is to know the exact rule for your account. Check your account's welcome kit, look on the bank's website, or simply walk into your branch and ask the staff. Ask them clearly. What is the monthly average balance for my account? A great way to manage this is to use a buffer amount. If your minimum balance requirement is 10,000 rupees, try to always keep at least 11,000 or 12,000 in the account. This extra cushion protects you from accidentally dipping below the required average. Another very effective strategy is to consolidate your bank accounts. Many of us over the years end up with multiple savings accounts in different banks that we barely use. Each of these accounts might have its own minimum balance requirement. It is much smarter to close the accounts you don't need and keep your money in one or two primary accounts. This makes it easier to maintain the required balance and also simplifies your financial life. Finally, if you find it consistently difficult to maintain the minimum balance, talk to your bank. Ask them if you can convert your existing account to a basic savings bank deposit account or any other type of zero balance account they might offer. These accounts are designed under RBI guidelines for financial inclusion and have no minimum balance requirements. We have covered a lot today, from understanding minimum balance to learning how to avoid the charges. The final and most crucial step is choosing the right bank and the right type of account that fits your lifestyle and financial situation. Don't just open an account at a bank because your friend or family member uses it. Your financial needs are unique to you. If you have a regular, stable income and can afford to keep a certain amount of money aside, you can opt for a regular savings account at a private bank like HDFC or ICICI. These accounts often come with better features, like a higher number of free ATM transactions, better debit card offers, and a more seamless digital banking experience. On the other hand, if your income is irregular, or if you are a student, or if you simply don't want to worry about maintaining a minimum balance, then a zero balance account is your best friend. Accounts like the SBI Basic Savings Bank account or similar offerings from other banks are perfect for you. In conclusion, the best bank account is the one that aligns with your financial habits. Always compare the features, fees, and requirements of at least 2 or 3 banks before deciding. Pay close attention to the minimum balance rules and the penalties for not meeting them. By investing a little time in research today, you can build a healthy and stress-free relationship with your bank for years to come. Remember, being financially smart means making informed choices that save you money and help you grow. Choose wisely.